Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Welcome back, fellow traders. I have your watch list for June 27th. Let's recap trading session today, then dive into our watch list. The stock market had a tepid start to the week, with the S&P 500 falling 0.5% and the Dow giving back 13 points. The technology sector, which had experienced a strong rally in recent months, continued to pull back, resulting in a 1.2% decline in the Nasdaq. The movement in rates was notable, as 10-year Treasury yields initially dropped below 3.7% before ending the day with a modest decline. The decrease in rates could be attributed to investors moving toward lower-risk investments amidst some weakness in equity markets. However, Monday's overall market action was relatively benign, and equities are still holding onto a year-to-date return of approximately 14%. Looking at sector performance, real estate, energy, and materials stocks were the leaders of the day, benefiting from lower rates and gains in commodity prices such as oil and gold. Over the last month, consumer discretionary and technology sectors have been the standout performers, rising 11% and 10% respectively. This is driven by optimism about the economy's resilience and the strong performance of mega-cap tech companies like Microsoft, Nvidia, and Alphabet. On the other hand, utilities and energy sectors have been lagging in the past month. Industrials have shown strength in recent months, reflecting optimism about the cyclical sectors, while financials have also rebounded moderately since the mid-March banking crisis. Corporate earnings remain a key driver in the market. The focus has been on the Federal Reserve's rate policies, but earnings results will play a significant role in influencing market sentiment for the rest of the year. The first quarter earnings exceeded expectations, providing support to the recent rally. Investors will now closely monitor if this resiliency can be sustained in the face of a slowing economy. Consensus expectations anticipate upward momentum in corporate profits in the second half of the year, which could positively impact equity market performance. However, there is a possibility of potential downward revisions to earnings estimates, which may cause short-term turbulence for stocks as the profit outlook aligns with the economic trajectory. Moving to tomorrow's events, the United States new home sales report is scheduled for release. In April 2023, sales of new single-family houses unexpectedly jumped 4.1% compared to forecasts, reaching the highest level since March of the previous year. However, March's data was revised lower. Regionally, sales in the South increased by 17.8% and in the Midwest by 11.8%, while the Northeast saw a significant decline of 58.6%, and the West experienced a 9.1% drop. The median price of new houses sold was $420,800, and the average sales price was $501,000. Additionally, the United States Dallas Fed Services Revenues Index is expected to decline to 6.0 in May, signaling steady activity growth. An interesting observation is that there are only a few trading days left in June. Historically, July has been the best trading month, with the market consistently showing positive performance since 2007. In terms of individual stocks, Nike, NKE, has been consistently beating earnings estimates and is expected to continue the trend in its next quarterly report. The company has surpassed estimates by an average of 41.35% in the last 2 quarters. Recent estimates have been revised higher for Nike, and the positive earnings surprise prediction, combined with a Zacks rank #3, hold, suggests the potential for another earnings beat. Nike is set to report its earnings on June 29, 2023. Moreover, SL Green Realty Corp, SLG.N, experienced a surge in its stock price today following news of a significant acquisition. The real estate investment trust, REIT, announced that it had entered into an agreement to acquire 2 New York City office buildings for a combined valuation of $2 billion. This deal is seen as a hopeful sign for the commercial real estate market in New York, which has been struggling in recent years due to oversupply, higher interest rates, and the rise of remote working. SL Green Realty's stock finished the session up 19.7% at $28.20, marking its largest one-day percentage gain since November 2020. The acquisition is expected to contribute to the company's future growth and strengthen its position in the New York City real estate market. In summary, Monday's trading session saw a relatively subdued market, with a slight decline in major indices. Real estate, energy, and materials stocks were the outperformers, benefiting from lower rates and gains in commodity prices. Corporate earnings will continue to be closely watched as they impact market sentiment. Tomorrow's economic releases, including the United States new home sales report and the Dallas Fed Services Revenues Index, will provide further insights into the state of the economy. Additionally, investors are eagerly awaiting Nike's upcoming earnings report, given its recent trend of beating estimates. Lastly, the news of SL Green Realty's acquisition of 2 New York City office buildings has generated optimism for the commercial real estate market in the city. That is your watch list. We hope you found this video informative and engaging. Don't forget to subscribe to our channel for more updates on the latest financial news and investment strategies. Remember to hit the like button and leave a comment below, letting us know what stocks you're currently watching. Your engagement is crucial in helping us create valuable content like this. Stay tuned for more insightful videos, and once again, thank you for being a part of our finance community.